Okay, hey, thank you everyone for tuning in. Today's Wednesday, the day before Thanksgiving, and I want to go over a sequence of trades from this morning that resulted in two butterflies, one around current prices and one down below. And I want to deconstruct the trades so we can see how they were pieced together. All right, so the first thing I'm going to do is just let's sum the debits and credits here. So selling a vertical for $1.30, spending $1.55. So there's a 25 debit. Selling something for $1.05. There's an 80 credit. Buying something for 70. There's a 10-cent credit, and then selling something for 250. So there's a 260 credit, a $2.60 credit, and multiply it by the multiplier of 100, $260 credits, and those are the commissions. So that left me with a couple of butterflies, and I entered in the prices for each component here minus commissions. So let's go through this. Let's break this apart piece by piece. So let me do this and open in a new tab. I'll do it again. We're going to need to do this several times. And let's start with that. Okay, so each of the components is there, and the sum of the debits and credits is 260. So I have a $260 credit on the position. And if we start in the beginning, the first thing I did was, let me get rid of all those. So we can see that I'm selling a call vertical, 68 handle. The strikes are 20 and 25. And it looks like that was done for $1.30. So this is how the position looked in the beginning. This is component number one. And let's go to the next piece. I'm going to get rid of that. Now we have four pieces there. So that looks right. Okay. So as the market was starting to go down, the next thing I did was I bought a call vertical, and I used the 25 strike to center these two verticals. I bought the 25.30, and that left me with a short butterfly. And the risk on this trade, or this structure, is the market pinning at 25 on the close, and that would leave me for a loss of 500 minus any credits received, which would be 55 cents in credits. So worst case scenario here is a loss of $445. And that's, let's see which time this trade was executed. Okay, so it's 6:56 Pacific time. And let's continue. Let's go down to well, let me throw up a chart real quick so we can follow along with the price action. So at around the time these trades were initiated, the market was at the high for the day, about 68.10 in the SPOOs. And then after I had the short butterfly on, market started to go down. So let's take a look at the next component of the trade. Short butterfly, center strike at 25 in the 68 handle. Let me open up a couple more of these. So okay, so we have the short fly, and after that, let's see, center strike 30. Okay, so the next thing was when the market was lower, I decided to buy back part of the short fly, and what I did was I bought the 2025, and looks like I paid 80 cents for it, and that would leave the following P&L graph. And this trade was done at, when did I buy this? This trade was executed. I bought the 2025 at 7:16. At 7:16 in the morning. So the first trade was at 6:37, 7 minutes after the open. 19 minutes later, I did that. I created a short butterfly, and then I covered half of it by purchasing the 2025 for 80 cents. All right, so the next thing after that was, let me see, where are we here? 2025. So I can go out here. I bought the 2025 for 80 cents. And then I went to the other side of the ledger and I started selling put verticals. So here I'm in the 67 handle and I sold a 65.70 put vertical, and that brought in a credit of, looks like, what is this, a buck, what am I missing here? A $1.05. So I did this for a $1.05, and now I have the following, where in between the 70 strike and the 25 strike, which is 55 wide, I have a small profit, and I have this downside here on the short put vertical. So this could go out 500 minus any credits, which is going to basically be around $400 if I were not to do anything else. And on the upside, I have the long call vertical, which can produce 500 on top of the small credit that this current structure had provided. Okay, so I sell the 70.65 put vertical, but I don't want all that risk on the downside. So after I do that, I decide to buy back the 60 or the 75. I don't buy it back. What I do is I buy a different vertical, the 75.70, and this is a put vertical done 13 minutes after I did the 65.70. So what this does is it's going to create 92.87. So what that does is it's going to create a butterfly down below, so I no longer have that 400 of risk to the downside should prices descend beyond the verticals here. So I have this butterfly which provides some protection, and just think of it as, should the market go back to this area, I have a $500 spot on my bingo card at the 70 strike. And up above, I have this call vertical, which can produce an extra 500. And at this point, the combined structure produces a small credit. So there's no downside risk on this trade. Let's take a look at the timestamp on this to see where we are. I bought the 75.70 at 7:34 a.m. Okay. At that point, I decided to go get some exercise and some sunshine, some fresh air. I did leave a working order to do the following. So what I was doing here was selling a call vertical, 30.35 were the strikes in the 68 handle, and I left a resting order to sell it for 250. So let's take a quick look at the chart. At roughly at about these are 5-minute candles. So from 7:25 onward p.m. Pacific time, the market started to rally, and it actually went back to the area where I initially started selling call verticals, and then the order that I had in to sell the 30.35 was filled, and that left me with the following structure. So here's selling the 30.35 for 250. And remember, this price here, this credit of 260, does not include commissions, just as a FYI. So we have the following. Across the board, the worst case scenario for now with this current structure is a credit of 260 minus commissions. And I have a butterfly, 2 spots on the bingo card. Bingo number 1 is down below 67.70, where if it hits, pins the tail on the donkey, you get an additional $500 on top of the 260 base here. And bingo spot number 2 is 68.30. You get an additional $500 on top of the what did I do there? On top of the 260 credit. So what started out as a short call vertical became a short butterfly, and after the market descended to around the 80-ish level, I decided to cover this leg, and that left me with the long call vertical. And from there, I decided to sell a put vertical, and I didn't want this risk, so I butterflied it off, left me with that. I still had this call vertical up above, and then on the subsequent rise in price from this point, I decided to butterfly this off. So it left me with 2 butterflies, a 260 credit, and I got my Batmanish looking crown on top. All right, that's it for today. Thanks for tuning in. Enjoy the holiday. I'll catch you guys later.